We're here at the New York Stock Exchange at the end of a very busy week. Central banks were in the spotlight, and as expected, the Fed Reserve hiked by 25 basis points. So joining me now is Alan Valdes of SilverBear Capital. Alan, great to have you here today.
Thanks for having me as always.
Well, of course, we're paying attention to the Fed Reserve. We got the rate hike as expected, but the comments were translated and interpreted as being dovish. Now, the Fed is expected to hike by 2 more times this year, so overall, that does mean that we'll see normalization in terms of rates. So what do you make of the Fed as well as the PBOC?
Well, it's kind of strange what happened yesterday. I don't think the Feds thought the market would rally as much as it did. I mean, the reason they're raising rates is to tighten things, which basically means they don't want a runaway stock market. Instead, the market was up 100 points yesterday. We're down a little today. But I think it's kind of having not the actual different effect, opposite effect, but it's not working out, I think, the way they exactly planned. But I think you will see 2 more rate hikes in June and September probably this year. And then they're calling for 4 in 18 and 4 in 19, bring it up to 3% by 19. The way the market's going, that's good, but you just don't know. I mean, it was only 10 months ago when BritX was going to tank the world markets. And then it was only, 5 months ago in October that any kind of Trump election was spelled dooms for the world, especially the U.S. election. So to predict 33 months out is essentially what they're doing. It's a stretch.
And Alan, you brought up a lot of important points there. We are halfway through the month, so that does mean we're edging closer to the second quarter of 2017. Now, we do have more event risk coming in terms of the French elections, but given that we already got the results from the Dutch elections, at least what we know for now, what do you expect to see in the Eurozone in the coming quarter?
Well, the chairman, Ms. Yellen's locked in. She can't go anywhere anytime soon. But the governors, they can be elected by the president. So you could see a sea change going on. And obviously, he's going to elect more hawkish type of governors. And we'll see what happens there. It's going to change that picture for sure at the Fed. And it's going to be interesting. But I think right now, even the doves are on the same page as the hawks. They want to see interest rates rise in this kind of environment, which is the right thing. Wall Street does want to see interest rates rise in a rising economy, which we see. And I think Yellen put it when she said it's simple. The economy is doing well, and it is, at the moment, doing well.
And indeed, if we look at the economic data that came out this week, whether it's housing or inflation, we are seeing above expectation readings or things coming in as forecast. But we did see interesting trading action this week in the commodities. Following the decline in the dollar, we saw gold, silver rally, and surprisingly, crude oil futures are edging closer to $50. But given that we're heading into the weekend and we have the G20 coming up, what are you paying attention to in the coming week?
Well, as far as commodities go, you're 100% right. Weaker dollar yesterday saw gold rise. Gold was going to rise anyway because of Yellen saying, inflation was a little hotter than she thought. So that was going to put a rise in inflation. Oil, we saw a little pop. Again, weaker dollar, better for commodity prices. So I think that's going to play back and forth all year. I think you're going to see oil up and down, but basically in this same range. Gold, we're up 2% right now on the day. So that's a nice pop for gold. That could continue to rise.
And last but not least, this week is a special week. You had your birthday as well, so happy birthday. And another thing is we're seeing a lot of household names going public in terms of IPOs. We had Snap, J. Jill, and we had Canada Goose. So what do you think of the IPO market going forward?
I think we're going to have a good year in the IPO market. There's a lot of money out there, a lot of money on the sidelines, but a lot of money that feels the market might be a little toppy here. Maybe it's a good time to get into some of these IPOs. Snap was great, oversubscribed. Canadian Goose today was good IPO, strong. So I think you're going to see a strong IPO market going into this year because there's so much money. A lot of European money coming into the market. We had the Dutch election yesterday, which was a win for those that don't want to see the populist movement. But we'll have to see what happens now in France and Germany coming up this spring. Those are 2 biggies. But the Netherlands was status quo. A lot of people thought it was close, but they didn't think the incumbent would lose. So they're sending mixed signals now, but I think you'll see a lot of money still come into. We're seeing money come into the 10-year. That's why the reaction in the bond market. So I think that'll keep up. And the IPOs, good names like Canadian Goose today and Snap last week or the week before, you'll see a lot of money flow into those.
Okay, Alan, well, thank you so much for your insight and have a great weekend.
You too. Thank you very much.